What's going on, everybody? Welcome on in to the stream as we approach, I guess, the second week of trading. Last week we started off not the first full week. This is the first full week of trading in March. So the first full week of trading in March, we're about to kick off. But let's dive on into what is going on. There's a lot of stuff going on across the board. We got to talk about futures. We got to talk about oil, because that is continuing to go higher and higher and higher, seemingly every day as we speak, right? And so this has been the ultimate question, right, that we've been asking, and kind of one of the things that a lot of us have been talking about for the past couple of weeks on the streams, and past couple of streams at a minimum of how high can this go, and the real risk reward behind this as of right now. And we'll talk about a little more about that here as we go. Everyone has our thoughts, but at the end of the day, what we got to talk about is just how wild things are getting. So the national average right now for a gallon of gas tops $4, highest price at the pump since 2008. Now the question was going to be, and you're seeing across the board, I'm curious, where you live, where gas is at. Just right now, at least where I am in Austin, Texas, we're seeing 350s to 4. Maybe you can get just under 350 in some spots, but I'd say between 350 and 4 is roughly kind of like what I was just seeing, the past couple hours today, just driving around. So I'm curious. I've been seeing some wild numbers up over $5, $6, $7 in LA, I think, at some spots. I mean, it's wild to see this type of stuff. But, we are hitting the highest levels since 2008. But the question is going to be, right, do we come back to the downside, and how fast do we spike up? These are the type of events where it's like, it's very, very possible that we don't see this continue at this pace, right? We get this crazy freak out panic phase that spikes things even higher. People may be kind of trying to, just fill up, because why not right now? Because who knows how high it can get. And in that phase, it spikes things even higher. The demand people get that freak out, and then all of a sudden the backside comes. Now, when that backside comes, I'm not interested in trying to guess, right? But because we could keep going higher in the coming days and weeks, and with what's going on in Russia, we have no idea how bad this could really get. So it's kind of a situation where, you think about what happened with Putin, and if you want to try to guess what's going on there, that's going to correlate a good bit to seems what we're looking at for oil prices. So we'll talk about some of that here in a second. Let me just dive into that. Let's go over to oil really quick. But so look at Brent futures. I'm just looking at Brent futures are here at like 129. Brent crude, I mean, this is at almost 130 right now, up 9% here. So accelerating, to the upside in a massive, massive way. Let's take a look at what we got here, a 5-minute chart or the 5-day chart. So here's the gap up, or here's what we're looking at. We kind of finished last week. I guess last week we were here at 118 or so, but we're pushing up to 129 as we speak right now. Futures wise, let's go back over here and take a look. Yeah, I mean, crude oil, WTI crude is just continuing to accelerate. We were sitting here in low 90s. Literally like 2 weeks ago, we were in the low 90s, and that has gone up to now 125, 126, which is nuts as we speak right now. But you see how things were kind of progressing, and this is kind of, it is obviously the result of the war situation and all that. But if you take a look at what's going on, right, we kind of saw this slow, progression of higher lows on oil, and that kind of really was pretty solid for the past like year and a half or so. Really, honestly been really, you got to go back to like the pandemic, and ever since then, higher lows being built in, pretty slow and steady. But now we're getting to that point of a parabolic move to the upside, and just kind of the absolute extension, which could potentially be, who knows, the potential top of this phase of this past like 2-year run, at least in the short term. We'll see. But that's kind of how things tend to go. You get these kind of parabolic extensions that could lead into those tops. So how high this goes and how quickly that happens is the ultimate question that we've been kind of talking about. And in the meantime, right, that's going to be key, because that's going to help guide us, at least depending upon momentum for a lot of stocks going forward. And then on top of that, the backside will be insane as well. So when we do eventually hit that backside and we start seeing crude coming down, maybe that's next month, maybe it's next year. I don't know, right? Who knows how long this is going to last? But that backside, or that cool off phase, even that consolidation phase, there'll be a lot of small cap stocks, a lot of low float stocks that have gone crazy over the past couple of days. And some will probably continue to go crazy this week, which we want to talk about some of those. Those are going to have great backside moves that we can take advantage of. So that'll be fun to talk about and dive into as well. We'll talk about, yes, I definitely want to talk about some energy and oil plays for sure. That's the plan, at least. I'm going to go through my old watch list, and we'll talk about some other ones as well. And we can even look up some new ones too. Some low floaters will be a good idea just to kind of get a feel for stuff that, maybe, popping and maybe moving pretty nicely tomorrow morning, at least in pre-market, or depending upon how things play out. The theme is there for oil. The question is, how much follow through are we going to get on small caps? That's the question. So we'll talk about that in a second. Here's futures. Let's just refresh this page and let's zoom in here in a second. Where are we? Here we go. Okay, so as I scroll back up to the top of our page, real-time futures, what do we got right now? As we speak right now, oil is up like 10% going into tomorrow. Looks like the Dow is going to be down. Looks like it's down 0.92 as we speak right now. S&P down 1.24, tech down 1.64, and then small caps down 1.03. And the VIX is elevated by nearly 5% as we speak right now, futures-wise. Now, we've been talking about this stuff, and we know how this stuff is going to change. Basically, this who knows where we're going to open tomorrow morning. There could be some news overnight, or things can just slowly kind of claw back and grind back and go back even, for all we know. That's been the story, is trusting any green overnight and really trusting any red. It doesn't seem like it always works out to be that perfect, right? When you wake up the next day. So if you have puts, right now you're probably feeling pretty good, but it's very possible that you can wake up and you can be feeling the complete opposite by the time you wake up. So we'll see. Don't get too overly excited about things as of right now. Even oil-wise, right? That could possibly just slowly kind of fade back off by the morning. So we'll see. All right, oil's exploding. Yes, it is. Gas in Canada, that's insane too. Crypto's crashing again. California, 5.69, almost $6. That's nuts. That is nuts. Let's see. Let's take a look. Okay. I want to dive into my old list because I have a bunch of old lists here. If I go back through, I'm pretty sure there should be in here. Oil. Here are my old oil list. Some of these things are delisted, so I got to get rid of some of these guys. This guy needs to get deleted. That's no longer even listed. Okay, so here we go. HUSA is one of my favorites and had a very, very great day to finish off last week. This is ticker symbol HUSA. This is one of my favorite stocks, honestly, that I've had a lot of fun with in the past couple of years. I mean, just look at these charts. I mean, if you're looking back to the left on this chart on HUSA, HUSA, I mean, this is one of those perfect examples of a low floater that just has these spikes, pops and falls back off, and then spikes and pops and falls back off and spikes. And it has some major moves. I mean, from the lows that we saw, if you go back here, back into, looks like September of 2020, I mean, look at this move. From those lows, let me draw a little line right here. From those lows to the highs, man, this thing went over 500%. So some wild moves. INDO, we'll talk about that one too. But across this board, what we're looking at though on these oil names, here's HUSA. They do look pretty. They have some good extensions going into last week. So Friday, some really nice moves. But HUSA is up here towards like this level right here, 225. So it's already higher. Now, let's look at the 4-hour chart and get a better view here. We might have some resistance back into the levels we saw, it looks like September, October, which is going to be up here towards like 275. So that's going to be a good target to have in terms of a price zone to take profits into if you're in or looking to get in and play the trend. So this up into this range of 250 to 275 could be a really good spot. Beyond that, we have CEI. CEI had a pretty good day on Friday for sure. Where did it finish up in the after hours? Let's take a look at the 5-minute chart on CEI. It finished a little bit higher, hit 84 cents, pulled back, then pushed up. But CEI is going to be one that probably makes a nice move here if it holds over 80 cents. CEI is key to hold over 80 cents. We get a hold over that level, then we're going to $1. And at least, I would say at least 90 cents, then $1. So those are the levels I'm looking for on CEI. The problem that you're going to have to be careful of is that you need to make sure if you're looking to take these for any momentum trades, if you're not already in any of these oil stocks or you're looking for something, find something that's a lot lower. Find something that hasn't run 30, 40, 50% yet. That's a better risk reward. But you want to make sure that you're not chasing these things up, because if all of a sudden you wake up Monday morning and these things are up 10, 20, 30, 40, 50, dare I say, there could be some up 100% in pre-market tomorrow. It's possible. We'll see how the algorithms go and how that plays out. But if that's the case, then you don't want to necessarily be buying that, because all of a sudden the market could open. If the market opens and oil just pulls back, and this was that last parabolic move, and oil pulls back for a couple of days, well, you're going to be the one holding the bag on some of these stocks, and they may never come back. to those levels for a long time. So you don't want to be caught in that situation. That's one thing that I would say it would be a concern. Just be careful if you're playing that. Make sure that momentum is there. Make sure you're watching oil. Make sure you have crude oil pulled up on the side and you're watching, is it crashing, right? Is it moving, rapidly? And if it is, then just make sure you're being aware of that, because that's going to probably help drive some of these moves. That's really important to think about. AXAS, I'm surprised this one's even here. AXAS has had a couple really solid days actually here, the past couple of weeks, really since March. Yeah, it's pretty solid right there on AXAS. This guy is a crazy one too. I don't really know. This one is an interesting stock. It's done quite well. It could definitely go. $4 will be my next zone to take some profits if you're looking at that one as another target to look at. GBR has some history of major runs. GBR, look at this thing. Crazy run back here. Looks like roughly early 2021 this thing went from like $2 to $30. So now we're here sitting here just under $4. A break over 4 is key. Let me zoom in a little bit. Breaking up over 4 is key. Then we got to hold over 4 for a bigger move. So you want the key with these stocks is going to be that the break above key levels and then continuation. So if you see a prior area that was a resistance or a prior spike or a prior high, and we break above that prior high, okay, great. But now are we going to maintain it, or are we spiking above and then falling right back below? That's not as healthy for continuation, right? So you don't want to be getting caught up in some of those. That's a GBR. SNMP is, I don't think it's like a pure oil play, but it at least has run in the sector before. It's a pretty solid play that's had a nice little double bottom almost here around 30 cents and 2 bounces. Now it's going for a little bit of a move. This one could definitely make a nice run too. ENSV, look at this one the past couple of days. Very solid moves to the upside. Every dip is getting bought up. Now I want to see this thing continuing to build up over 115, 125, and it had a really nice after hours, and it's sitting at 157 now in the after hours, or at least how it finished off last week. So this one could be a solid play into this coming week. USEG is another one to watch as well. USEG is at 458. And it closed just shy of $5 in the after hour. So what I'm expecting for some of these names is I'm expecting these to initially spike in pre-market hours tomorrow morning with oil pushing up. I think that these are going to be very solid plays to play the spike. But I'm actually also expecting some big pullbacks. So what would also not be a terrible idea for some of these is to literally, I can float through this list. If you're interested in playing the short side, or you want to play the short side, these will probably pop, and who knows, things could change, coming into tomorrow morning. These will probably make a nice pop at 4 or 5 a.m., right? The initial first wave of traders are able to buy these things. They see oil up, ripping. They're like, all right, I'm going to start slapping these, these low floats, right? They start buying them. They'll probably spike, and then they're probably going to have a really nice period of taking profits when everyone starts to wake up and their broker opens up, 7 a.m. time frame, and they had a swing from last week. It's going to be a really good time to take some profits. You're up a nice chunk from where you were last week. Okay, take some profits. And then if oil continues to hold and build throughout the day, if oil stays elevated, and we'll see how the reaction is across a lot of other stocks, if the theme continues, then looking at these stocks again to look to play the long side for continuation if they start to hold up and they don't just immediately crash back to the downside. The problem with oil is these are one of the biggest stocks that you can make a lot of money and lose a lot of money on the low flow oils. They are some of the craziest movers, and they often are terrible stocks to chase. Just based off of past history, you can see these things make 100% moves and give it all back the exact same day. Just make sure that you're aware of that. RCON, another one of those to watch as well. This one is interesting. Fits the sector to a degree, but this one has really sold off for quite some time, and it has a lot more range. So if I had to pick a stock on my previous list, oil and gas list, this is one that looks like a lot more in terms of risk reward, a lot better risk reward chart wise. And then I had USWS back here as well, also looking pretty good. Look for a move up to $2+, I would say, on that one as well. So that's that list. That's my old list that I've had for the past couple of years, watching these things. My favorite low flow oil plays. But here's INDO, one of the craziest movers of this past week. Let's talk about this one. 100% day on Friday after already being up massive the past week and a half, 2 weeks. The question is now going to be, how high does this go? I think we can probably see $100. It depends how the algorithms and how things shape up into tomorrow morning, at least oil-wise and market-wise. But we could very well be waking up to this thing popping over $50 and then waiting for the market to open up, and this thing could go to $100. It's very, very possible, and who knows? Who knows how high it's going to go? The great thing about this, though, is that this is the stock, and this is the good stuff that we're seeing develop right now, that in front of our eyes, if you're not paying attention or you're missing it, no big deal. But what we're seeing is that, look at this stock. It went now over 1,000% in a matter of like 2 weeks. That's great, because that is a great sign for algorithms. That's a great sign for small caps. It's a great sign for momentum in small caps. So now we're going to probably start to notice a lot of other small caps and other sectors have a little more juice, right? If one stock starts to pop off, there's some good news, or we start seeing news flow into something else. What if now, which I think is a good idea to start looking into, which we can cover a couple of these names, is now with oil going so high, the logical thought now is to maybe look at solar names and look at even the EV names. And so now we want to start funneling our way back into those and backing our way into those stocks. And some of those small caps, some of those low floats now can probably go really, really hard, because we have now had oil set the stage. Algorithms are back on. We have some more confidence in low float stocks. We have some more confidence in momentum traders again, which brings in more volume and brings in more attention and more focus into some of those names going forward. So that's what I'd be very, very interested in. Another thing to think about too, with these oil low floats, right? INDO is by far taking the center stage, right? That has offered some good, this is going to offer some good opportunities on a lot of other names. If we have 10 stocks tomorrow that are all going oil stocks, right? They're all going 30, 40, 50%, making those types of gains or more, which is possible, maybe not, but a lot of low floats could do that, right? Very easily. And just an example too, even if there was 5 or even 4, right? If you have a lot of them, what does that do? It spreads the volume out, spreads it out. So if you can find the weakness and find some of the ones that are weaker, those are the ones you want to stay away from, or those are the ones you want to maybe short, because there's going to be some really big backside. But when there's a lot more focus on one name, just like, GameStop and AMC, a year back, right? Everyone focus in. You saw how crazy those could go. The same thing has happened for years and years and years, and will continue to happen in small caps, really any sector, any stock, doesn't matter. That will continue to happen, but you want to make sure you're watching. So if we see a big runner tomorrow, right, but there's like 5 others that are like also up a lot too, that could take some volume from the main runner, and that main runner may not be the best place to be long, because there could be some pull out of that one, and people saying, yeah, screw it, taking profits and moving into something else. But if we have, one stock up 100%, and like the next highest stock is up 50, and there's a 30%er and there's a 20%er, that's telling us, hey, there's a lot more focus here on the 100%. If the volume is there too, watching how much volume that one's trading versus the others. But if the volume starts spreading out, then that's not a good sign in terms of seeing a massive, massive, massive mover. Just something to think about and watch as we go forward. So INDO is going to be an amazing backside trader at some point. Just not right now. I just don't think there's a need to get in front of this thing unless you're very, very quick to scalp it or to day trade it pretty fast off of any breakdowns or weakness that we're seeing. So that's what I'm looking at there. PED, yes, PED's another one to watch too. PED and IMPP. IMPP had a really nice after hours, if I'm not mistaken. Let's look at IMPP. Hit 338. This thing just broke up over the high right here, and we draw a line right there. The high that we saw back on the 28th of January. So it broke over that level. Now you want to see it building up over 350. And if it can hold over 350, that's a great sign for a continuation move on that. And then PED, this one, if I'm not mistaken, has had some insider activity. Let's just go take a look. I'm going to go take a quick look on FinViz, because I know PED has had some insider activity. I've seen them pop up a couple times, so I'm curious to just jump through and look. Okay, yeah, they've been sells. So PED's had some insider sells, 106, 118, in the 1-teens roughly. No, not like crazy high amounts, I guess, $50,000, between $10,000 and $50,000. So some insider sells been going on there. But PED's had a nice little move. Look at PED. I mean, here's the chart for PED. Let's just take a look. Step back. PED. This thing, had a spike back here in October timeframe up here towards 250 almost, 240. So you could be looking at a move from $2 to 240. Could be a really good spot to take some profits. Why? It's some of these highs. So you want to just draw, what you want to do for profit taking zones is just draw lines, horizontal lines at key areas of resistance or key spikes in the past on some of these daily charts. And these are generally some very, very strong areas to watch going forward. So that $2 is roughly what I'm looking at first on PED. And then from $2 to 240, there'll be some more resistance there on that one. But I do like how it's been, building up, and it hasn't moved as much as some other ones. It's been building higher lows very, very nicely, really since the start of the year, or really since the end of last year. So I like how that one's setting up, to be honest. Let's see your thoughts on ABEO. Took a size low position at 0.27. ABEO, I feel like I definitely have traded this one in the past. Yeah, this is a good chart. I mean, I don't not like this one. There must have been an offering. I'm imagining back here, back at end of last year, must have been an offering or something like that that dropped us down. So if it was an offering, they probably have some cash, and now you're kind of hovering around the 50 SMA. A little bit more volume this past week than we at least have been seeing the past couple of weeks before that, past month before that. So that's a good sign. The problem with these, right, and it's probably worth a video at some point soon. The problem with some of those penny stocks is going to be making sure you understand what is going on here. Because if you don't understand what's going on with this company, and you start holding it and you're holding it and you're holding it and you're holding it, the days that go by and you're holding it, they're burning cash. Right? They're burning cash. They are using their cash for research, development, whatever they're doing, especially biotechs and pharma companies, like this is a biotech play. I like it. I would say your first target up here towards like $47, the top of this gap right here from the offering, probably 50 cents, close enough. That could be a really good target, which would be a big move. I mean, if from here to there, right, that's still it's like 70%. It's a big move. But that would be a good target, at least I would have in mind. I would not want to see this thing starting to fall back off below like 20 cents. And I wouldn't want to be bag holding this thing too low, ideally, if you were in this thing. So just be careful with that. Because it obviously could go lower. But I mean, a big drawdown, this thing has room to go back. This thing has some room. But again, the problem with this is that if they're going to be doing these offerings, they're probably going to do a reverse stock split. So these offerings and reverse splits generally aren't great. However, that could continue to keep this thing alive. And if you're good on your timing of getting in after an offering nice and low, or after a reverse stock split, when the thing kind of sells off a little bit more, these can have some really big runs, and they have done in the past, and you have seen some great examples of these stocks running. But when you're under $1, many times you got to continue to kind of do these reverse stock splits just to remain listed on your let's say like the NASDAQ, whatever, you're going to remain listed on, whatever. So that's the problem with that. If you are going to be bag holding these things forever, good chance that you could be caught up in some dilution and reverse splits, which you may not need to be, which will probably hurt you and bring your average down. So have cash available to add if you still want to play this thing out, but just be careful of that. That's the danger with a lot of these companies. They are low on cash. MXC is an oil play, by the way. One sec. Let me go back through really quick. 18K Bitcoin. What is Bitcoin doing right now? I'm actually curious. Let's see. How's it handling? 38. It pulled back. It's not down to the lows here. Honestly, it's kind of holding these levels. If it can hold these same levels that it has held the past couple of weeks, that would be a good sign. But to be honest, I'm not, in the doomsday situation. That's not really where I kind of intend to be really for anything. But Bitcoin wise, I'm not a huge fan of just of buying it kind of right now. I think that there could be a much more, as I said before, a much more sustained downturn period for a year or two, and that would be the period that I would want to buy. So let it do its thing, and once people are crying in stuff is what I'd be interested in that, to be honest. I don't know, it could go, if it does drop below 30K, I think it is probably come back to 20K, maybe even lower. Silver could low-key pop out. Let's take a look at SLV. I think SLV is breaking out of it's showing some really good strength here. It's not to the top of the range here, but our zone is from like 20 up to like 26. So it's not a super low float mover, obviously, right? You're not going to be playing silver and gold and thinking it's a penny stock, but it's probably something that you might feel more confident playing with heavier size, or a good hedge, or even to play the move to the upside on these things. These are doing pretty well, especially with the fear and global fear and whatnot, for sure. I don't know if you guys saw. I just saw a tweet today. I'm not sure if it's confirmed, but it was from a verified Twitter account. that apparently Russia is going to be shutting down their internet, essentially, or like literally like the internet. You will no longer have access to the internet. It will only be like Russian websites and stuff, like certain Russian things, which is nuts. Just to kind of contain everyone from seeing certain stuff and videos and whatever. Because, I mean, again, you got these riots in the streets and whatnot, which I think is a great thing. It's scary because people are getting detained, thousands of people are getting arrested and whatnot. But again, right, if you got tens of thousands of hundreds of thousands of people out there, how many people can you arrest? You can't. You just can't do it. So you're really seeing the backlash there. Putin is, I have no idea. I don't want to get too deep into that stuff because anything can happen, anything can change. And, don't even get us started on the nuclear side of things, which is like super fearful mongering. But, it's possible we go that route if he doesn't get what he wants and how this goes. But it's wild. It's wild. And so all that fear is kind of a good bit of why you're seeing commodities, oil and you're seeing oil for other reasons that aren't obviously with Russia, but you're seeing gold, silver, and a lot of other stuff is kind of making moves to metals. MXC, another good play, low floater oil-wise. Let's take a look. Yeah, I have seen MXC, I think, as well last week. Yeah, this had a nice crazy move on Friday. This thing went from 13 to had an 84% day. This could have a really nice move. It had really been solid the past couple of months, and this is killer. This could have a nice move. The thing is that this might be a little scary for some because it is a higher price stock. So it's something to think about. I'm going to add it on my list. Let me just quickly go control, add to watch list. Where's my oil watch list? Boom. Add to my oil watch list. Because I'm probably going to be on this list. I'm going to add INDO as well, I guess, because INDO has been running with oil too. I'm going to just make sure I have these on the list. These are some stocks that maybe not today, tomorrow, and they're probably terrible stocks to in terms of the amount of money it's going to cost you or the short fees and whatever. Where's oil? Here. It's going to be super expensive to short these things. But in 2 weeks, if oil starts to cool off and the momentum shifts into something else, let's say all of a sudden EVs are going or green energy plays are going, well then guess what? Then these stocks are going to come back in a massive way, and INDO probably, who knows where it goes tomorrow or this week, but it's very possible that this thing comes back down to like 15 and then 9 and then 5, so there'll be some really good chunks to take out of the downside as well once the momentum really kind of flows out of these things. So we'll see. It's good to have on your list, I think, at least at a minimum. Miss out on oil, I agree, it's a little risky. Well, that's the thing is I think a lot of people get into that situation where like they do all this, not they do all this stuff, but like they're in these plays and like then like they're like, I missed that, and then they jump into it late and they buy the top. If you're buying INDO for a swing right now, maybe you get lucky, but it's like, okay, man, you better be lock in gains. If you're in this thing for a swing, right, and the thing goes from, let's say, 40 to 60 and you didn't take any profits, it's a little stupid to me, in my opinion. I know you want another 100% or you want the 1,000. You're not going to get 1,000%, I'll tell you that, on the move from 40 when buying this thing over $40 when the stock should be like a $2 stock. You're just not going to get that type of move. I don't care how high oil goes. The way you get the 1,000% is you load these boats early, you lock in some gains along the way, and then you leave a couple shares. You leave, a tenth of your position or 20% of your position to ride as you're up so much. It's kind of just, mad money. It's play money at that point, and it's not going to make or break your account. It can, I guess, maybe make your week, month, year if it does go 1,000%. But that's how you want to play that. You don't want to be doing that up here on stocks like INDO, whatever, right? Silver seems like a good buy. So many electric applications. Silver has no substitute. Silver's been in the 15 to 30 range forever. Time for a run. Just don't know if you covered CEI. CEI I did, but I'll cover it again really quick. CEI is 80 cents is the level. So CEI, here's the thing. I want to see this thing holding over 80 cents. And then if it can hold over 80 cents, which kind of was where it was getting stuffed in the after hours and it was hovering around that level yesterday. If it can hold above 80 cents, and then that's where you can get 90 to $1 and even potentially more than $1. But that's what I'd be watching for CEI going forward, at least right now this week. Let me go back to the daily chart. Let's see. What do you think about NEO? You would think, right, the logical idea here is oil's ripping, gas prices are ripping, right? So EVs. I saw a tweet. It was like, yeah, well, someone was like, yeah, I filled up my my car for, $100 or my whatever for $100 or for $75, my tank. And then it's like, well, I just filled up my Tesla for $8 last night, like $8 of electricity, right? So you kind of see it makes logical sense. I think it's a pretty valid point, right? The question though is going to be, how much is the market willing to play the growth and play some of those names right now? And if we get a true sector rotation. So you want to see a true sector. I would love it when if you went from oil to clean energy and even EVs, like it makes sense. That's where you want to be thinking right now, I would say. So if you missed the oil run, well, maybe look to find, a couple, EV names or a couple clean energy names that are down super, super low. Load a couple of those names at the bottoms or at, relatively close to the bottoms, lower into their range because they're getting beaten down with the overall stock market being down, right? Or, roughly speaking. Then that's where you can kind of play out on some of those or have a chance at some of those bigger, swings or bigger runners if we get that shift. If the shift doesn't happen, you got to be okay with taking a loss and moving on because these stocks could continue to just tumble off a cliff if the market doesn't turn or if that sector rotation never actually occurs. So that's the biggest question. I'm actually going to take a look at futures really quick right now because I'm curious. 30 minutes have gone by, so let me check on these. Okay, so yeah, they're down more, but not like that much more. So tech is down 2%, small caps 1.5, 1.4, and S&P 1.5. So despite oil being up, tech stocks, small cap stocks, are going to have some weight. They're going to have some pressure because futures are looking pretty gross, right? If this holds into tomorrow, that's what's going to be key. So, it's one of those things where it's like, I just love when you wake up when you go to bed at night knowing you're going to have less money in your account tomorrow than when you had, on Friday. But that's the nature of holding long positions. If you're going to be an active day trader, then that's a different story. You have the complete control over, okay, I am up or down. I am going to hold this overnight. I'm not. If you have positions that you're holding or a portfolio you're holding, just understand you're going to move with the ebbs and flows in the market. And just as fast as things can come down, they can bounce back depending upon what sectors and what stocks you're playing and where you were at. So just take it with a grain of salt. Don't just, a lot of people get freaked out by a couple days, whereas, you could have a couple green days in a row that bounce back and more depending upon where you're positioned and where you're situated. People freak out though. And human nature wants to panic sell the bottom or panic sell the dips, panic sell at the fear and then miss out on the upside that comes after instead of maybe, averaging and buying more, which is why, you always want to have cash available, which is probably the biggest thing that we'll be preaching going forward and you guys can see it live. I mean, you can see it happening, right? The Webull account that we have been, literally trading in actively right on this account on the channel, it's a high risk, high reward. And the biggest problem that I have had in that account is that I have not held enough cash. If I had held more cash, I would have, number one, been able to potentially hedge some downside better. And then I would be able to take advantage of some bounce back opportunities in a more sizable way, right? So if things down, eventually we've got a bounce day, boom, you can play that reversal day, and that could be a really nice bounce back gain if you have cash to potentially add something at the lows or add on a dip that bounces back. Then you can take some profits off the table, lock something in. Now you got some more cash freed up, and now you can hedge yourself for more downside if we do see more downside, right? So you can kind of see how things work. But when you don't have cash, and like you're in a position, everything's kind of slowly floating off to the downside, your hands are tied. You can't do too much about it, and it sucks. So that's how you kind of feel, right? When you're in a downturn or in a choppy environment, right, in the markets. So that's one of the things we've been dealing with, at least in the portfolio, which is it's been a challenge, and it's been a great learning experience to deal with that. At least the past couple of months more intensely, the past year or so. On and off, right? Small cap land. I want to dive into Mullen in a second. So that we're talking about NEO. NEO probably comes down to 1650, as crazy as that sounds. If we get a bigger flush out tomorrow or early this week, if the markets are weak, I think 1650 is your zone to watch on NEO for the next dip buy zone. But I think 1650 is a spot that I like. It was a prior resistance and support in back in the initial run in 2020. So I like that. Going back to ABEO offering, yes. Runway, I believe, was 18 months. Last I checked, they do have recurring revenue annually, which is helpful. So that's a good thing. When you want to make sure you have a good feel into the company, right? And if you have a good feel and you know this isn't, obviously anything could happen and the market can go lower, they can dilute, they can do whatever they want to do, right? They can reverse split on you and stuff. But, if you have a good feel on that, and you know that this isn't like going to be, explosion of just, bankruptcy, right? Any day, then you're in a better spot. The problem for a lot of penny stocks is going to be these companies that are going to get closer and closer to having to go bankrupt because they can't raise funds. They got no cash. They're burning capital like crazy. They're failing trials. Their data's bad. Those are the ones, obviously, we got to be careful of. Don't just think, bad data, it's a dip buy opportunity. That may not be the case right now for some stocks and some small caps that are really struggling in terms of their financials. Because in the past, bad data presents a really big dip opportunity and then presents some good gap fill opportunities. If they have other products and other stuff in the pipeline, it could be a really nice, recovery trade. But many times you got to be careful. Right now, maybe not so much. All right. Many a play to the 38 to 40 cent range. Yes. Well, that's a good start, a good target. What's a better investment? 1,000 shares of ABML or 1 share of Tesla? I have no idea what ABML is. American Battery Technology. Well, maybe, who knows? I don't know much about this company, this stock. Mining company engaged in exploration of lithium projects. Okay, well, that has potentially some ties, right, to the EV space or some nice ties in that space. So that could be an interesting play. I would say the safer play is probably Tesla. The problem with this is that this could spike, right, to $4, right, like it kind of did in the past. It could go to $5, right? It could spike. And if you're not taking profits and then it falls back to $2, you miss out on, the biggest gains. The problem with ABML is that, it could potentially be for some time a better investment than Tesla if you're able to lock in gains. But if you're going to continue to hold for the bigger move, many times you end up, holding the bag and then you're holding the backside. Next thing you know, you're taking profits at, 5% when you could have had, 200%, right? That's part of the small cap game, right? Russian citizens are getting screwed. They are. I mean, it's just nuts. From what I've seen, it's just wild there. I don't know how much longer, to be honest, it can realistically go on without things really intensifying there. And I don't know how much we're going to know, because now if they're getting cut off, the more they're getting cut off, the less we're probably going to be able to hear and see what's actually happening in Russia for the average citizen. So that's what's nuts. But that's part of what makes this whole mess, right, even more insane, as we see. Let's see. Mullen. Yes. If you make that transition, right, we think oil and gas, and then the logical thought is, okay, green energy EVs. Mullen is an EV company. MULN. Let me pull it up. Mullen Automotive. This, we bought some on the stream last week, and we're like, hey, if it falls under 90 cents, we're out, and it did. So we kind of got that breakdown on Friday, and it ended up saving us because it fell below 90 and it went down to sub 80. So we could have, if you held the whole way down, right, you're down more, which is why you got to have a stop in place. Now this again, though, I, to be honest, don't dislike this thing down here, even though it technically broke below a key support that I was holding last week. Again, this is one of those EVs that has gotten destroyed. Not saying it's the best company in the world. Not saying this thing needs to go 1,000%. But if this thing can pop up into that, $3 range, even $2, that would be a wild type of move. So I kind of like it. Let's see how this thing shapes up this week. We'll obviously be on a stream again. I'll stream again tomorrow in the afternoon at least. So we'll see. But this will be one to watch for sure in the EV space. Actually, let me just make sure I have it on my watch list too. Where is it? EVs. So I'll have that on the watch list there, so that I can go back to it easier. But yeah, I think this is going to be a good one to have ready to go if we do get some flow into EVs and stuff, because it had a crazy run and it can do it again, right? Hit $2 already. So, it can go back, it can get right back up there. It came right back down. Let's see. Just filled my Ford EV or a Ford E150 van for $225. Man, that's nuts. That's nuts. Can you see futures on? I don't believe you can on Webull. I wonder if you can on the markets tab. I don't think you can. Maybe on the markets tab. I don't think you can. But That I think is supposed to be coming. I think I saw something recently that's supposed to be coming soon. But just jumping over to futures, you can look at them on TD Ameritrade. Obviously, you can go to investing.com and see the actual just numbers here. But TD Ameritrade is probably a great place to go to get the live futures as they come in. It's like /ES and / for S&P, and then /CL for crude oil. But that's what we're looking at there. Just jumping back into crude oil, right? This was up. See, it's coming down a touch. I mean, as we speak right now. Let's just see if I can get a better view of the chart here. Give it a second to load up. So here's, if I zoom in, well, no, it's still not giving us the best. It's not giving us like the perfect display here. Whatever. Either way, let's see if I can customize this. Extended hours. Here we go. There we go. Is that? No, it's still not giving it to us. Whatever. But either way, number wise, it's at 125 roughly on WTI crude. We'll have to see. It's up 8%. Let's see how that holds up overnight, right? Just think of 8% on WTI 125, right? If you wake up tomorrow morning and it's at 120, okay, well, it gave back a lot of the gains overnight. So previous close was at 115.68. So yeah, that's pretty nuts. But it did hit 130 initially on the opening of futures trading. It hit 130 today. So it gave back $5 off the highs. But they had that initial panic and freak out period, so it doesn't surprise me. 225 is nuts though for filling up. I mean, I think I filled the tank up like a week and a half ago, and it was like, well, I don't know how. I think it was it was a pretty small tank, but like it was not that bad. At least for me, it depends on what you're driving. Obviously, then it hurts a lot more. For sure. Okay, Putin will not back down, not an inch. That's the thing. We won't be trading for a new VCR. CDEV and Bohr. Bohr is another interesting one. Let me look at Bohr really quick. Bohr is another oil-related play. Had a really solid past couple of days. Bohr has been pushing on up. Let me actually draw that one on. Add that to my list too. Add that to the oil list. Bohr is actually. Let me just draw a zone right here. High right here at 330. What is that? 335. Yeah. Oh wow. 335. That's where we got. That is also, that lines up with the high from a few months back. Well, this is actually going back to last year. This time last year, Bohr hit 325 or 335. So that's key. If it can get over that, then we're going to 425, even $5. But we're at a resistance right now on Bohr. So if Bohr gets over 335, I'd want to see it holding up over 3.25, 325, and building from there. That's what I would want to see, some strength. I wouldn't want to see this thing kind of just spiking and falling back off. That's the key for continuation for this week, I think, in oil names, is if we get the spike and hold, or do we get the spike and pop and drops, and then is it like, a lot of people have been, the whole thing has been, continuation. We haven't been seeing it across a lot of small caps, but oil showed it last week. Will it continue this week is the ultimate question. So I love the random 100% runs. The uptrends have been key, though. That's what's been working. If you're playing stuff in a downtrend that keeps going lower, chances are it's probably going to keep going lower with the overall market right now, unless the market just bounces back and has a crazy couple of weeks. But that's true. I would say the uptrends and the key, what's been key is finding stuff that's made some nice moves, pulled back a good bit, but now it starts to hold up and it's building higher lows. Then boom, that's where you hammer it with a decent risk on it, and boom, that's where you want to be playing, at least focusing right now. At least that's how I see it. In and out, only way to play for me. Small caps at a bounce, another at same price. People playing a bottom. Baba looks good at 100 even. Let's take a look at Baba. I wonder, we got, what's his name? Charlie Munger was buying a bunch of Baba. Well, that thing hit just below $100 on Friday briefly. It's probably going to be under $100 tomorrow, my guess, if futures open up, or whatever, if they actually are and going to be where they're saying they are. Let's take a look. Here is futures again, right? S&P 1.5% down, Dow down over 1. So you're looking at its growth is down, right? Tech's going to be down, but almost 2%. This is this is going to change rapidly throughout the night, but this could be very well, another down day for all these names like Neo, Baba. What else has been hit? ARK Invest. I mean, these are going to get hit again. What's ARK K at? ARK Invest is nuts because this thing got over $70 a couple days back on Monday, And then it fell right back off, and now it's probably going to go down below 60 again, and it's probably going to go down to 50, 57, 50 is the lows. It's very possible we go down below that level and this thing hits new lows. I mean, this has been the trend on ARK, so that's what it looks like for tomorrow, I would say, for almost, I wouldn't say with certainty because who knows what happens overnight, but it's probably going to be, testing that 57 again this week if we keep seeing that weakness in the market. Let's see. We must not push Putin too hard as he will lose control and cause bigger problems. That's the thing. I mean, it's one of the biggest, like, it's the fine line. It's where, like, you got Ukraine and Zelensky saying that, NATO and the US needs to step up and help. But then it's like, yes, I understand. And it's like, they understand. But if you do that, Russia keeps threatening, saying, well, if you help or you do this or you do that, that's going to say, hey, that's essentially a declaration or an act of war on your part. And so you open us up to, fighting you as well. And the Europe and the US, they just do not, they want to avoid at all costs a bigger scale war throughout Europe and throughout the world potentially. So that's the biggest thing. Now, how much is Putin bluffing in terms of the nuclear factor, and how, as of right now, you understand how things are playing out, but technically they got their allies and stuff, so you cause a whole world war. But really, Russia is probably in a pretty weak spot, I would say, right now, with based on how their own country, their own people are acting, and where they're their hands are tied, and you're kind of seeing, yeah, they have the mass outnumbering power behind what they're doing right now in Ukraine, but you add in a couple other countries to the mix, and it's an easy, just Russia's done. There's no chance. But then you got Russia and their allies who start coming in, and then you have a whole other story, and then you have a whole nuclear war. And so that's the escalation that everyone's trying to avoid, right? So the full-scale economic sanctions are what they're going for first, and then seeing how that plays out and how things can progress from there is ultimately, I guess, how people are, or how, I guess, those are trying to handle it above our heads. ES is trading at last Sunday's bottom. See if we continue the range or break lows. Yeah, we shall see. Let's look at SPY. I'll pull up SPY really quick and just show us where we kind of finished off last week on SPY. Not that bad. It honestly was not that bad in my opinion. We had a decent little day on Friday. It wasn't like a terrible. We didn't finish at the lows. We finished towards the highs of the day of the intraday range. But at this pace, we're probably going to be coming down, right? We're down like almost 1.5%. So, do the math on where we are here. 1.5% takes you down to like somewhere in this range, 425 or so area. And, now we potentially could be coming down 420. This could be very possible that we are setting up with an inverse head and shoulders. We'll see. Obviously it's too early to tell, and who knows, right? But it's very possible if we do kind of come down on like the S&P, like into something like this, you could be setting up for like something like an inverse head and shoulders where you have your left shoulder, here's your head, here's your right shoulder, and then a bigger move back to the upside at some point. That could be what you're setting up as. But again, let it play out. We have no idea if that's going to happen. And any news and this war situation and oil is going to all help drive that. And we'll see how that plays out ultimately. E-Trade, you can see features before market open. Hive, not sure why. What's up with Hive? Let's take a look at it. HIVE. It's kind of trying to hold up around the 160. It hit 150 held. Trying to hold that 150 area. Now it's at 178. It's trying to hold up. If it drops below this 158, it probably comes and tests that level. Let's see what happens. I'm not sure. It doesn't look terrible, but you want to see it holding the 150 zone now. I wouldn't want to see it dropping below these lows that we just had the past couple of weeks, right in here. So that's kind of where you would want to see it. And it's been pretty volatile, but let's just see how that plays out. Give it some more time to shake out. 50 SMA resistance for now. CLF, give me your opinion on CLF chart. Let's take a look. CLF. Cleveland Cliffs. Here is the weekly chart. Okay, so you kind of have pretty nice move up. Now, kind of flagging almost and kind of consolidating, lower highs, lower lows, and now you're breaking that trend. You're breaking out. You've put in now a higher high, relatively speaking to this, and you are up at these key areas of resistance now. You're almost fully breaking the highs here. So let's draw a line right here, 2650. That is your level. 2650 is your resistance. A break over 2650 could be a good breakout, although it also be careful of a false breakout. It needs to hold above that 2650 for that breakout to continue to the upside, right? That's what we've been watching on that. That does look pretty strong. It does. I can't deny that at all. But then look back here. You got a little resistance at 28. The highs that we saw back in here. So be careful of 28 bucks or so if we do break out to the upside. A good breakout target could be a move of, let's say, a break of 2650, a hold above, great, move 28, take profit at 28, and then we'll let the rest ride for a bigger move up, right? If you're playing options or something like that, I would say. Find stocks the craziness doesn't touch or move much, right? I think fears will continue, and we're going to fall, but I think max fear is nearing before the melts up. I'm not going to be buying anything crazy on SPY calls. Yeah, I mean, this is how kind of things play out, is you have, the longer the chop plays out, what do you have, right? What I think is more important to look at, if you're just looking at the overall market perspective, right, looking at the S&P and stuff, to be honest, last week wasn't that bad of a week. It was a red week, sure, but it was pretty much a choppy week. Now, we'll see what happens this week and how we open up and how we finish the week. But, for how fearful it seems like things are and the way things have been, I'm kind of surprised we've been holding up. And the dip got bought up after the invasion, right? That dip got bought up pretty fast that day. So let's see how it plays out. But, if we do come down 420-ish and all of a sudden 420 holds and we kind of don't die and we're back up to 430 pretty fast, again, right, with more fears, let's say more bad news comes out. To be honest, in my opinion, the market's holding up quite well despite what's going on. I don't think it's actually, I think this is in the medium term, this is probably pretty bullish because of how negative it seems like sentiment is across social media, across just the markets in general. You just look on CNBC, we're in a bear market for the next couple of months, right? Whatever. With how negative sentiment is, and we're not just continuing to make new lows every day, right? We'll see how this week goes, but it's held up better than I thought, right? Given the news. So we'll see. NVIDIA 230 puts expiring 4/1. Let's see what NVIDIA puts. Well, this looks pretty. I mean, you're going to open up low. You're going to be up. That's going to be up relative to the close last week tomorrow, right? So this is probably going to come down towards like the 215 to 210 zone, I think, pretty easily on NVIDIA. You're probably coming right into here tomorrow or this week, We'll see how the market plays out, right? But this is where you're looking at. So that's not terrible. I mean, 230 puts, you're going to be in the money by a good bit. So this comes into here. You might be at a good day to take some profits tomorrow if this does open up down below 220, 225, maybe if it opens below 225, or heads down below 225 and down to 220-ish, that could be a really good profit, type of day. And premiums with the VIX so high, UVXY up this high. Look at UVXY, volatility index. With this being elevated, right, this is going to be a little bit higher tomorrow, right? This is really good for, making options more expensive for you. So just be careful. It's not a bad time to be selling covered calls, to be selling puts. It's a really good time for that because premiums are juicy, really juicy. Let's see. It could set up low delta condors if you think it's going to stay in the range for a while with options. Yeah, that's true. You could do that too. Love to start our position in LABA in the 12s. Got to be patient this week and then pounce. Yeah, I think that's going to be. I'm probably going to add a touch more to that. I'll probably add another contract to that. It's probably going to come down to the 12s tomorrow, my guess. Maybe even hit a new low, even go below 12. We'll see. But this can be a very fast bouncer. So I kind of like where I'd be sitting at for the June options on those. They're risky, like we've been saying. They're risky, so it's not like I'm putting the whole account in there, but they certainly are risky. It's going to be pretty nasty, I'm guessing, this week in the portfolio because of the airlines. I didn't buy any dips last week because, again, I just had no idea what's going to happen over the weekend with oil and stuff. And so I'm letting things shake out for a little bit longer, and I have plenty of time on my expirations. I have no problem getting out of them if it needs to be done, but I also don't want to be the one that just ends up selling the bottom. So we'll see how the airlines hold up this week. We'll see how JetBlue does. We'll see how Jets does. But with oil ripping, it's not going to be good for them by any means. We're probably going to go Jets below $18. I would say it's not out of the question. Fill this gap down to like 18ish. Yeah, it's probably where we're going on Jets down here. I'm going to draw a zone right there down to like 18 is where we're probably headed on Jets. Yeah, so that's going to be wild to see how this ends up shaking itself out. But they were looking so good 2 weeks ago, right? They were looking so good before the Russia invasion situation. And then boom, right at resistance, boom, this thing got hit. Oil's ripping up and fuel is going higher. And so it just definitely is not going to help the airlines again, right? It will remain to be seen how much that actually is going to affect some of these airlines, given, the funniest thing is just kind of the nature of how things work out sometimes, right? You're fighting the uphill battle against the news and the media, it seems like, against COVID restrictions and COVID this and COVID that, just kind of bringing a negative, or a dark cloud over the airlines and travel stocks and like, no, not where you want to be. These are going to be tough stocks. No one's traveling, right? That's kind of the sentiment, how it was for so long. Now it's like, you're not seeing anything about COVID in the news. I mean, maybe if you're really watching the news, I don't know, but you're not seeing nearly the coverage on COVID. No one's talking about it. It's like it's like a thing in the past. We moved on, right? It's how it feels. So the negative, that the cloud there has cleared, but now a new cloud's rolled in with kind of a little bit of a tornado involved as well. And maybe even a little hurricane action, right? You got some rain, you got some hail coming in, and that is the Russia, and that's oil prices going up. So that's what's killing the airlines. So portfolio is going to, who knows? Anything could happen, but I have, a decent chunk is in the airlines. So that's going to get hit this week. But we'll see how that ends up shaking out. Maybe, that gets bought up by the end of the week and oil falls back off. Who knows? We'll see. Let's see. How much lower can Vissel go? It could keep going, but it's actually holding up better than, it's held up a lot better as of late. Had a pretty nasty day on Friday, I guess, and did fall off a good bit. 80 cents was the low. This could be, we'll see how it goes. If it ends up holding above 80 cents, this could be kind of like your inverse head and shoulders. We'll see how tomorrow goes and shapes up. But here's your left. Maybe this is the bottom, and then we'll see if this holds above 80, 85. Maybe if 85 holds up, that'd be great. 83, something like that. These all can go a lot lower. Just make sure you understand that. So taking profits into some of these moves up, some relief bounces on some other names is not a bad way to play it. Let's see. RSX 2-day trades. Nice. Now, RSX, did they stop trading that thing yet, or is that still available? I'm wondering if you can. How long am I holding NVOS? I'm holding NVOS until it spikes, essentially is what I'm doing. NVOS, I'm holding until it spikes or until the earnings tell me I should get out. That's it. I'm playing that essentially as that. So when I say a spike, I'm looking for a day of a move of 30% or more. It's roughly kind of, or 25% or more. And then I'm mostly out. And then if it starts falling back off and momentum is not picked back up on it, then I just get out and that's it. It's actually honestly pretty much right around my average. If not, I might be slightly green on it now. But I'm looking to take something off a table here up from right now where it's at 175 to $2 just to thin my position or release some cash in case it comes right back down. And then I'll rebuy that. If we get that this week, great. If not, no biggie. I don't really care. But it had better volume this past week than we had been seeing, right? Averaging 50K plus volume, whereas the prior weeks we're talking 8,000 in one day, 29,000, we're talking 25,000. So it was pretty bad in terms of volume wise in recent weeks. So it got a little better. Maybe that's a signal of something to come. It wouldn't be surprising if that is a signal of something to come, but let's see what happens. That's the plan there. Sold 2 covered calls on CHBT last week, $17 a piece. Again, these are going to be interesting plays, right? With how ChargePoint, right? Even though it's kind of like that growth name and whatever, and it has the tech, feel. So you look at tech and say, oh, futures are down. Tech's going to be down tomorrow. Yeah, sure. Maybe it's down initially, but the rotation or the move to EVs, man, that's going to be, I think, where a lot of people are going to be thinking about next. It just makes logical sense to go to green energy and EVs. So we'll see if we start to notice that shift. And if we do, that's where you want to be early to. You don't want to be kind of jumping in late after the fact. If you're buying oil stocks now, a lot of these have made big runs. Could they keep going? Yes. But if you're buying them now, you miss out on some good moves. So you're going to be buying dips, buying pullbacks to minimize your downside. But you could be looking at some bigger moves than some other stocks that are sitting on bottoms if we get that rotation into the next sector. But we have yet to kind of see that follow through and continuation out of one sector into the next can really happen. But it could be setting up now. Me, Kevin, is thinking we're heading to a recession in the next 12 to 14 months. How do you recession-proof yourself? There's a lot of things you could technically do. I don't know. Then at the end of the day, there's a lot of things. What I'm thinking at is this. Personally, again, we have been kind of slowly pulling back. So that's one bleed out way of things to play out, right? You could obviously hedge yourself with puts, hedge yourself with UVXY and volatility products and whatnot. But the way you really hedge that is playing like gold, silver, play some commodity plays, right? Playing some of the metals, some of the rare earth plays. That's one way to hedge it. Oil has been, kind of a hedge there, but now I wouldn't touch that. I would let that do its thing. I wouldn't be going heavy in oil to hedge myself. That's you're literally buying a parabolic stock, just like it's buying oil up here. It could go more, but buying oil up here is like you're buying, I don't know, AMD, or you're buying like, a firm, a couple months ago, like a firm. It's the same. It's going to be the same situation at some point, right? A firm had this crazy move from the 50s up to 175. Like you could be buying oil now. Maybe you're buying it here, like 133, on a firm. Maybe it goes to 175 in the next couple of months, but eventually you're going to get something like this on the backside on these parabolic moves. Just be, careful of that. And people will be like, no, it can't go that low, and it can. It definitely can. And of course, that's going to be heavily news driven and really geopolitically driven as well. So we shall see. But I think the best way to play that is to hedge yourself with, you play some gold, I play some silver, potentially as having some positions there. But then also I would say, if we do get some really nice major moves, like people are like we've been talking about, the thesis behind the melt up idea on the S&P into a top, followed by a huge bear market recession, massive time, right? Massive just destruction. If that thesis played out in any means, the way you play it is you go heavier cash into strength. You don't go heavier cash into weakness. You play it into strength. And so for me, to be honest, to me right now, we've been holding up better than I thought, which I think makes that potential signal for a move higher in the coming months very, very possible. But then maybe if we get a crazy move higher, right, given what's going on across the world, who knows? We'll see how things are playing out across the world, across the economy. And then, it might make a lot of sense to hedge yourself by having more cash, buying some puts for, 6 months, a year out, right? Buying some puts just in case something crazy happens, and you have that protection to the downside. That's one way I would say. That's how I'm planning on letting things play out. Ultimately, things never work to your exact plan, so we'll see. But my intention is, come the summer, I want to get this. I want to be mostly cash, at least in this portfolio, and be pretty much day trade scalp focused, scalp oriented, with maybe a couple hedges on here and there, hedges on for the overall market. If we are up that high, like if SPY goes 500 plus, is how I've been saying it. If SPY goes 500 plus, then yes, you can bet I'm going to have at least half my portfolio as cash every night. There's no way, there's no ifs, ands, or buts. If SPY is 500 plus, I'm going to have half my portfolio cash. That's it. That's it. And then I'll probably have either a put contract out for 6 to 12 months. I might have some UVXY, might have UVXY shares, might have a call contract on that. And I might have some small silver and gold calls or something like SLV calls or something like that, is how I'd play that, just so I'm there. And then, a lot of the portfolio is cash every day. So if we get a crazy move down or a crazy gap down that gets bought up, well, maybe you can take advantage of some of the rebound, right? Or if small caps are really hot, maybe, swinging small or playing some scalps intraday, day trade wise, that's where at least I would be focused. That's the plan, at least going into the summer and to the end of this second half of this year. But for right now, I think that there's a good opportunity based on how things are shaping up. We'll see how this all shakes out with Russia and everything, but I think it could be setting up with some really good opportunities. We shall see, though. Anything can change with how things go across in Russia and stuff. That's the plan. Let's see. What about some crypto, just for giggles? Like ADA, Shiba. Hard to believe crypto has been following stocks. Yeah, it used to be the opposite. I get that. Let's take a look at. I'm actually curious how Shiba Inu is doing. SHIB is actually kind of setting. It's kind of setting up. If you think about this setup on a lot of stocks, it's actually really nice. If it can kind of hold this area right in here, you could be setting up for at some point, right, a break back to the upside. Who knows how high, but a break back to the upside, is very, very possible on that. Where is? Let's see. I want to pull up ETH. Let's say like Ethereum. I don't follow crypto very, very close though, to be honest with you. Ethereum, here's your downtrend line right here. You got to break up over 3,000 is key on Ethereum. But if it holds, again, if this thing holds up around, $2,400 again, it's putting in kind of higher lows, as wild as it may seem, still. So these, to be honest, these don't, the S&P, right? To some, oh yeah, here we go. Everyone looks at the S&P, right? Everybody who's like the Mr. Fearmonger, or who's always in puts when the market's down. Apparently, they're always in puts, and they're always in calls when the market's up, right? They look at the S&P chart and they say to themselves, "Yeah, here's the S&P chart, guys. Here it is. Here's the S&P. We're going like that." And they pull up some massive time frame and they go down to 300, right? It's possible that happens. I think you're going to need some bigger news or bigger driver for that to happen, right? And it's not going to happen when everyone is as fearful and as bearish as it seems right now. But this doesn't look that bad in my view, right? If we end up holding up and we don't go below this 410, we hold 420 or even 415 or something like that, this could be setting up for a really good reversal, at least in my eyes, when everyone's jumping or just thinking bearish. And there could be some really good moves on that side of things. Smash the like. Yeah, if you guys, that's the only thing I do ask. I mean, I would hope people, hit the thumbs up button if they get something out of the streams and videos. That's all I ask. We'll do another one tomorrow. I'm not wrapping it up just yet, but in a few minutes I do. It's been over an hour, so I don't want to be too long in case someone wants to come back and watch after the fact. Thumbs up button helps out a ton. Comments help out a ton, and we'll have another stream tomorrow. Probably the last hour or so of the market open into the close, just because we'll see how the day goes, and then we'll assess, okay, what's going on, and do we get a day where we gap down followed by people bought it, the market comes back up and it gets bought back, or is it a gap down and we just flush out all day? That will tell us a lot of kind of what to expect maybe the rest of the week, depending on how tomorrow goes. I'm buying NNDM for 10-year hold, imaginal 3D. This is actually just a kind of a quick segue into how I kind of see or potentially envision one of the portfolios that I want to kind of transition or at least into eventually, right? And I think it will be good for kind of different playlists on the channel in the next couple months and years, really, because I just have no intention. I have no intention of stopping, right? But we'll be opening an account or using one of my current accounts, right? Just making clearing it out or making it easy, and going one stock at a time. And the intention behind it is to look at it like literally like real estate. Look at it like a portfolio of assets, right? Like how stocks are. But I buy, like, for example, NNDM. If I believe in NNDM, for example, here's NNDM in the dimension, it's now at 320. What I do, though, is I don't buy the stock until I can buy 100 shares. So I do whatever I can do to get 100 shares, minimum, and I get 100 shares. Now, what can I do? I can sell covered calls every single week or every single month, depending on the options expiration. So for NNDM, I can sell covered calls every single week on NNDM. And I'm not going to be selling covered, like, for example, if I was in NNDM, maybe I'm selling the 350s or the $4 covered calls. They're not that expensive. They're not going to pay me very much. I don't care. But I'm looking at stocks that I believe in the growth story or potential here over the long run, but stocks that I know I can sell covered calls against every single week or every single month to generate cash flow into the portfolio to help grow it even faster, on top of obviously hoping to deposit money consistently into that account too. And then building up one asset here, one asset there. And then as you build that portfolio, you have a bunch of different assets that are all paying you every single week. All I got to do every Monday morning, I come in or whatever, right? I can, make it Monday afternoons, whatever. We come in, we do like a live stream. We come in and we go collect our rent. We go in and we go sell that covered call and we go collect our rent. And if it gets taken out by the end of the week, great. I'll be happy to take profits there. Then we can reassess. Maybe we want to go find a different asset because that asset appreciated a lot in a very short period of time. I'll go find something else, or I'll wait for that asset to come back down and I'll buy it again, and I'll just do rinse and repeat, right, on the covered call process. And I think that's a really, it's not a very diversified way, but it's just making, looking at stocks that you believe in the next 5 to 10 years on, right? Not having a very short-term mindset approach. And if you get big moves, I have no problem locking in gains, taking profits, selling covered calls, and making, whatever. But playing it that way, that's a great way. And NNDM could very well be, they got tons of cash, a very potentially promising future company. This could be very one of those stocks, right? Like a SoFi. SoFi could be one that fits that bill, right? $10 stock, right? Get 100 shares. Get 100 shares. To do whatever you can do, get 100 shares. And then you get 100 shares, boom, right? Now you can play. Now you can play with the covered calls, and now you can build, run and bring in cash flow every single week, every single month. And, if you're playing options or contracts or stocks that have, like for SoFi, $1,000. Do whatever you can do to get $1,000. Boom, buy 100 shares. Now you can play the game every single week, right? So that's a fun way to play it. I think that could be a really fun portfolio to play and watch grow and just go collect the rent, right, every week. It's a cool way to think about it. Spy test 420s. We'll see. I don't know. We're like right now we're looking at like where we are right now. We're looking at like 425, 426 level right now on SPY. So we're gonna be like mid 420s. Will we get to 420? We'll see. I mean that's my next target level right to the downside here, like 421 ish. Could be that next zone, the lows that we saw back in January. So that could be a good spot for if we do get a flush out. We'll see how the futures and how everything holds up overnight. But that's kind of a key. That'd be a spot to watch. Let's see. Does that play with gas up? I think all it really does is it just makes people more fearful. That's really what it's kind of causing with oil going higher. I mean, here, let's take a look at oil right now. It's coming down, guys. I mean, oil opened up futures, right, for crude, hit 130. Now, I know it's still up a lot, right? It closed last week at 115, right? It's at 123 right now. But, this is now coming down. It was up like 10%. Now or more than that. Now it's only up 6. So it's getting back some of that move, So let's see. Let's see what happens. But, it's a very fearful thing. Everyone's freaking out, panicking, fearful. And that's what you kind of are seeing, I think at least right now across the board. Markets in Japan are dropping 3% as oil prices surge on Russia-Ukraine conflict. And that's where the fear is at. And it's not a perfect correlation to what the market's going to do, but it's definitely not helping. People are fearful, panicking, sentiment. It's not going to be a good sign for inflation numbers and CPI numbers that are going to be coming out going forward. So yes, I mean it generally will have a negative pull, but doesn't mean that okay, oil goes down, market needs to go up. No, it doesn't mean that oil goes up, market must go down. Not necessarily, but we'll see though. All right. NNDM reports earnings. Got a bunch of Sunrun. Yes, Sunrun is actually interesting. It's a good idea for a possible. It's ticker symbol RUN. Sorry, I knew that. Run has been down a good bit. Yeah, it has. It has. Wow, look at that. This has been crazy too. This is coming back down. Let's look at this consolidation. We had highs. This is kind of your zone pre-pandemic. You've tested down into the levels we saw pre-pandemic on Sunrun. So you gave back all that and some, which is nuts to think about. But this could be a good spot. I mean, these could be good spots for moves. Sunrun is another one of those that could be a great covered call player. I mean, look at this. Get 100 shares. You only got to get $2,500. All you need is $2,500. Gets you 100 shares, and now you have an asset that you may believe in the next 10, 15 years of, right, in terms of solar and renewable energy, right? And now, boom, you got an asset in a space, in a sector you like, and now, guess what? You can hedge your downside by playing covered calls. So every month, in this case, Sunrun's got options every month. In this case, it's at 25. If I want to go out and sell the 30 contracts for this month, I go and make myself $60. I go collect my $60 rent check this month on Sunrun. Not to mention, if Sunrun hits $30, I make, $500 in my position. I got paid $60, so I made $560. Hey, if I make that return on my piece of land or my property, right, in that short period of time, I'll take that money and I'll go find something else that I see is undervalued, that I can see as a cash flowing property or a cash flowing stock, right, and I can bring it in. So I think it's a great way to think about it, really, on some of these stocks. So, you can play the diversification route, and I think it's a good idea to have a portfolio that is, maybe your IRA or a long-term investing portfolio that's diversified, but it's a cool, way to play the long run on some of these names. About to free up a few K next week or two myself after options expire, carrying 3 SPY straddles over the weekend. My view is one more dump into Fed meeting. Then push to all-time high so the big boys can sell into retail buyers. Then the real dump begins. If that would be kind of would make some sense, to be honest. And again, if we did get a push to all-time highs, you have to understand this, that you see how everyone is acting right now in terms of sentiment. The sentiment will be insanely bullish if we go to all-time highs. Everyone will be buying calls, buying its breakouts. It's going to be hot. So if we get to that point, make sure you're at least just hedging yourself for the backside, or just being, smart about taking profits off the table, right? If you're up big on this thing and you're saying to yourself, look at my screenshots, taking screenshots of this, sending it to your friends, then you're probably at a point where you might want to be taking profits, right? Or locking it in, or at least hedging your downside risk on something like that. Schwab will let you have 20 accounts. That's wild. I didn't know that. Charles Schwab, that's a cool idea to build out a portfolio like that. Yeah, I think the real estate idea just makes sense, to be honest. 100 shares for long-term is definitely the way to go. I do that myself every week and month. That's solid. 100 charge point, sell weeklies, collect EV charging rent from CHPT. People are out taking profits into oil. I think we hit DRIP next week. DRIP is the short oil, right? DRIP shorts oil. What is DRIP? What's the range on DRIP? DRIP is going to go up when oil goes down, right? So DRIP right now is sitting, it's got some range. This is sitting here at 290, 282 hit the low. So if this thing goes down to 250, we got to be looking at this. I'll put this on the list of oil and gas because it's the inverse, right? It's the 2X ETF. So bear, right? So this could pop. If oil pops back up, this could pop right back up to $3 from 250, $350, it could pop back up to 350 very, very fast, which could be a really nice 20%er type of move. So, could be even more than that on a backside of oil. So that's what I'll be looking at there. Let's see. I don't care if I'm not too bullish on oil. We'll see. I would say let's see how it plays. Let price action dictate itself. Let's see how this week goes. And let's see how the news kind of flows into this week and if that changes things at all. And we can make that decision when we get there. AMC. AMC has a strong resistance at $20, if I'm not mistaken. Yeah, AMC, here's your range. It actually has been putting in higher lows, believe it or not. So, since January. But it's got some strong resistance here at $20. So it's got to break $20 for a bigger move up. That's what we're looking at on AMC. Support's down here towards $14. IMPP, I do kind of like IMPP. I had a nice move to finish off last week. I'm not a huge fan of buying up here, but if it can hold above 340, this line right here, if it can hold above 340, that's key. 350. You want to see it holding above that level for a bigger move up, ideally. So yeah, DRIP is one to have on the radar if you want to short oil. If it's time for if it's a day trade opportunity, it could be a really good opportunity. I was looking at playing USO puts. It might just be a better idea to play DRIP if you're looking at puts on oil for a day trade. Just play DRIP shares, buy a ton of DRIP shares, and then stop yourself out if it drops below this point, and then look to take profits at these levels. And that's just how you want to play it. Maybe pull up oil on one screen on your phone, whatever. Pull up oil, just make sure you're checking back in, see how oil looks. If oil looks pretty weak, play DRIP to the upside, and then boom, you can make a few bucks for a day trade. Or I just, again, holding overnight in these conditions, anything long or short, I'm not a huge fan for something like that. That's been parabolic. Because again, if you held a short on oil over this weekend, you're going to be waking up tomorrow morning. Now, hey, crude's pulling back. It's been pulling back this entire stream, So, okay, maybe it ends up not being up as much, but if you were short oil over the weekend, now you're going to wake up, oil's up 5-6% from where it was. Your contracts or whatever you shorted it is probably worse because most people are probably not just shorting shares or just shorting, that way. We'll see though. But, over the weekend has been, at least if you go back through some of these rocky times in past history, the weekends are generally times where we see some craziness. Now, again, if you go back to last weekend, though, if you just go back to how things played out on SPY, SPY had this finish to last 2 weeks ago. It finished up here at 438. We woke up, 4 a.m. It was at 4:30, and then it ended up going back and actually going green briefly on that Monday. So last Monday. So anything could happen, though. Oil could go red for all we know tomorrow, based on how things are playing. Um, Shipping freight, especially with global shortages. Sold a $10 put on SoFi last week. We'll probably get a sign, no biggie. We'll sell the $12 call as well, and their $18.50 put. Yeah, to be honest, that's not bad. Again, right? You're on SoFi. You like SoFi for, let's say, a longer term play or whatever. You know what? You get a sign, you get assigned, right? You get the shares, and now you can sell covered calls and whatever. So it's not the end of the world, and especially if you're targeting certain spots and playing these things, then that's how you'd want to be doing it, right? And that's what we'd be talking about in that portfolio when we open and start setting it up and start diving into it a little bit more. What I'll probably do is I'll put in whatever I need to put in to get one stock, and we'll go for it. I'll get 100 shares of one stock. Maybe it's SoFi, maybe it's, I don't know. We'll see what other stocks I like, but maybe it's something like that. But I just be very selective on what I want. Maybe it's an ETF. I don't know. And we get something like that, and we get 100 shares. And then once we've got 100 shares, now we can play. Maybe it's XBI for all we know. I don't know. Toss in, like, I guess you could have 8,000 for that, $8,300 for XBI. So that's kind of, I guess, could be, you probably could find something a little bit cheaper to start off with, in that account, but it could be something that's like that. XBI would be really cool though, because then you can really play the cover call game on that side. Drip does look interesting for intraday. I wouldn't hold that thing though. The thing about oil though is, first off, we have no idea what news comes out this week. And then of course, the other thing you're going to have, and I don't know how this is ultimately plays out, and you can look at these crazy past cycles. I was looking at a little bit into some of this stuff over the weekend about how these tend to work out. These parabolic moves up, then you have this period of time, then you have this massive dump or crush to demand, a demand crush, or whatever they want, whatever it's technically called. I was reading some stuff this weekend where you have parabolic move up, prices go so high, demand is like, okay, well, we got, this oil crisis, supply, demand issues, all this stuff. And then all of a sudden demand just gets killed because everyone's like, well, I'm not buying anymore. I'm not going to buy gas. I'm not going to buy this. And all of a sudden the demand gets killed because everyone starts cutting back or whatever, or they're freaking out, it's just too high. And the solution is like, well, I'm just not going to buy it. If I don't need it, I'm just not going to buy it, right? Potentially. And then you can get a massive demand crush, which then just plummets. It's not a healthy price action either way, up and down. So it's super risky to be, in my opinion, it's much more risky to be long or short overnight. Doesn't matter which way you play it overnight, because you can have some news, something happen, and then you get these massive swings. So it's a good hedge, but it's not something that I would want to be heavily positioned in long or short, ideally. Palantir is another one. Palantir could be another one of those stocks. 100, you can do that too. Labu, again, it's a little bit of, I guess, a 3x ETF, maybe not the best, I don't know, play for that. Because if you go and do the math on how these are calculated, it technically, isn't perfectly correlated to how you would think. But you could do that too, right? $1,200 for this thing, or $1,300, and you can get 100 shares of that, and then play the selling puts on that. Palantir is pretty cheap as well. PLTR, I just started buying some in one of my IRAs, I think. I have IRAs in like multiple accounts, which is probably not good. I probably should consolidate, but I think on like TD Ameritrade, I think I had some money sitting around, so I just bought some Palantir last week in there, like in the 11.30 range. So I'm down a little bit on that, but this one's one that could be reasonable to get, a nice 100 shares of this. It costs you like $1,000. Okay, great, and then you can go from there. Demand destruction is what I was referring to. Demand destruction. So again, and then I was seeing, you see both arguments there. I was looking through a lot more of that stuff, and you see there's both arguments to the demand destruction, reason. And it's like, is this going to be a perfect situation? Is this a perfect scenario for that? Yes, no. And there's reasons, conflicting views either way. Drip is going to have a reverse split on 328. Okay, that's good to know. 100 ARK. Yeah, you could. I guess you could. Let's take a look. What is ARK? You can get, you could for $6K, right? For $6,000, you can buy 100 ARK, and technically you can sell covered calls against ARK every single week, if you like the stocks. Now, maybe there's a stock or two in there that you would prefer to buy instead, and you go buy those, right? Get 100 shares of those instead. Could be cheaper, depending upon the stock and situation. So, all right, let's take a look at futures last second, and then we'll wrap things up. So oil, as we speak, has kind of come back a little bit off of where it has been. It hit a high of 130 and now it's back to 123. So it's come down a little bit from that level, but it's still up. It closed last week at 115, so it's still up a good bit from that level. S&P futures are down 1.5. Looks like Tech Nasdaq down almost 2%. Small caps down 1.65, and Dow down 1.25. VIX is up about 7% as we speak right now. Tattooed Chef is another one. I think I like this the growth story behind Tattooed Chef. That's actually a good idea too. Let's take a look at that stock. TTCF. Yeah, I mean at $12, you got this thing. You can play that game too if you believe in the growth of this company. This is where it's going to be key though, especially if we go through a period of time coming up in the coming years. Where the markets get super rocky or they take a big hit. No one's safe, but if that ends up happening, you're going to need to rely on stock picking a lot more than just buy and hold the S&P ETF, right? That has been historically what works, but buying and holding the S&P ETF, okay, but individual stock picking is going to be a lot more crucial in times of chop or in times of, bear markets or in times of where the S&P is, not doing what it has been doing the past, year, 2 years, right, since the pandemic. So we'll see. That said, I'm going to wrap things up. I appreciate you guys for tuning in. Thanks so much. Always ask a thumbs up on the stream. We'll do another stream tomorrow afternoon, the last hour or so of the market close, until the market closes. So I guess the last hour of the market being open, we will do another stream. We'll see how things shape up. As of right now, right, we have oil that's up, right? We have overall market futures are down. Not terrible, not as bad as what they were like to start off last week, I guess. And this could all change by tomorrow. And we'll see. So I guess if you're in anything like me, like the airlines, we're not going to be looking good tomorrow. Right? But we'll see how it plays out, and we'll see how this all shapes up. I'm not just going to panic sell and let things play out. Let's see how the news kind of headlines read the next couple of days, this week at least with Putin and stuff. It's been wild, at least from what we're seeing in terms of what's going on in Russia. So I don't even know where to go in terms of that in that side of things. But that's going to be a big driver for the markets, it seems like. And then maybe eventually that ends up cooling off in terms of the headline risk, and headlines aren't driving things as much anymore. And we'll see if that ends up happening. Blink charging short sell percentage. I can pull up really quick the short float really quick on Blink. It's 42% of the float of the share float of 36 million shares is short. So like however many shares that is short, like 15 million shares almost is short, which is a lot. Based on FinViz. So this has been one that's been putting in higher lows. It's been holding up better than than some stocks, but still some, resistance here at $25 on Blink. So appreciate you guys as always. I'm going to wrap things up. We'll see how things play out and how things open up tomorrow morning. If oil stays up and if the market stays down, or if we get some sort of reversal back to the mean or something, into tomorrow morning. But we'll see. It should be pretty volatile this week, especially with, I think, CPI numbers.